How do we build Oh, yay. How do we build all those concierge, level trading services and tax management, tax loss harvesting, and all of that into one ecosystem? So it was a lot of different parties had to come to the table to build something that customized. So we're
Yeah.
really fired up about it.
Oh, man. Advisors are going to take that and run. They should at
That's
least.
beautiful.
Yeah, I think so. Cause I think it checks all the boxes of like, you know this, Samuel. There's always those handful of clients that you're like, I have to manage, the Johnson family. Like they just see me as their portfolio manager. And then there's the like range of everything else alongside it. So we're excited to have that level of comprehensiveness and advisor kind of ability to tack in and do what they think is best for their client.
Most definitely. Most definitely.
Yeah. All right. Let's get this party started. Welcome to a very exciting episode of Disruption Blueprint. I am so fired up to be here with Dr. Cherry and with Samuel, and we're going to have them introduce themselves and talk about the cool stuff in each of their firms. But I wanted to lay the groundwork of the genesis, the inspiration behind this panel. The three of us alongside Ryan George, we got to give a shout out to Ryan at DocuPace, who was our facilitator. We were on a panel with Raj and with Mike back in November at Tiburon. And our panel discussion was wealth management, regional and emerging advisors. And the three of us walked away from that panel so energized about the future of our industry, how to build the next up and coming wealth management firm serving diverse populations. What does behavioral finance look like in the future? My bad. Phone is ringing. I should know better. What does BFI look like? How is it influencing the client journey? All of this like rich content came out of that panel discussion. So we wanted to bring it like into the podcast and memorialize it. So Samuel, I'll start with you. Like tell us a little bit about your firm and give us the history. You've got such a rich history on Deane Wealth Management.
Yeah, thank you so much for having me once again. I'm looking forward to part two of our great conversation that we had over at Tiburon a couple of months ago. But I am Samuel Deane. I run a wealth management firm exclusively for founders and tech employees. My firm specializes in equity compensation and the tax planning that goes alongside with equity compensation. The story I shared at Tiburon was that I started my firm in 2018 as a 26-year-old in my parents' home, and I had the ability to take all the risk with a safety net of being at my parents' home. And over the last 6 years, I started my firm from scratch with no clients, no assets, no revenue, and not even, much years of experience in wealth management before starting my wealth management firm. I was fortunate to be young and dumb enough to think that I could do it, and I'm happy that I proved myself right. And so 6 years later, running a wealth management firm, as I mentioned, for founders and tech employees. We have a little over 10 million in assets under management. We serve about 35 to 40 households. And our business model, I don't know that it's unique, but we sort of have a what I like to call a barbell structured approach where we do financial planning and investment management and charge separately for those two services. And happy to dive in a little bit further on what that looks like and share a little bit more about my firm.
Awesome. All right, Dr. Cherry.
All right. Well, yes. So I didn't know we started our firms in the same year, Samuel. So 2018, I've been in this for a while. So I got my investing license in 2005, I think it was. And the first time I went to school, the second time I went to school was getting my master's in financial planning in 2006. And then my first job in financial planning was a junior financial planner in 2007, I believe it was. And then off to the races. So going on like 18 years in all aspects of wealth management, and 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 financial, services, as far as financial advice is concerned. I've been on both sides of the table. I've been a portfolio manager before for a family office. I managed about $120 million for a few years while still being a planner. I've been a junior planner, an associate planner. I've been a lead planner. I've had my own business. I've had retirement sales. I've been a wholesaler for a little bit. I mean, so I've seen a lot in this industry. And also, too, currently, not only running my own RIA, but also being a professor at a university. So I'm a researcher and a leader of a financial planning program and a Center for Financial Wellness, which we go out and give financial education in the community, specifically for Concurrent for the last 5 years. Virtual firm, working with Gen X, long forgotten folks. I mean, even right now, I mean, you know what I'm saying? Oh my gosh, they forget about it so much, and they have their own complex, times of life, being sandwich generation. They're high income earners most of the time, mid to high assets, and they have a lot of, things that they need to take care of being sandwiched. They have adult children and elderly care folks that they're talking about, and so much more. So that's who we are serving here at Concurrent. And the name Concurrent came from, you mentioned BFI, which is aligning life and money. Aligning life and money. So they work concurrently, and that's where the name came from, in order to achieve, their version of financial freedom in their life design.
Oh, I love that. We're going to have to come back to that thematically. So I want to start with growth and the absence of it in our industry. This is increasingly being talked about, that despite this, we are at the beginning of one of the most expansive and exciting chapters in the wealth management industry with the generational wealth transfer. We're squarely in this succession crisis and needing to find a solution for, 10,000 advisors retiring in the next 10 years. They're responsible for $10 trillion worth of assets. We've got all this PE money that's been flooding into the fintech side, into the platform side, and yet we're starving for organic growth. So 2% is the industry average. Firms that are smaller are growing faster. 250 million and less are growing at about 6%. We'll take a little bit of a victory lap here at RFG. It's a big focus for us. Our advisors leveraging the full extent of our platform, including investment management, growing at 19%, but it's an outlier. So I want to talk about growth and the overall state of advice. And Dr. Chair, I'm going to start with you. Why are we in a growth desert?
Well, the main reason, I think, is that there's a disconnect between what people want and expect and what advisors are delivering. And it's very hard, not necessarily very hard, but I guess for advisors to come out of their shell a little bit and want to know, if there's a gap that exists, and what that gap is. There's a couple of studies actually, of what in order what people actually want in different demographic like Gen X, or maybe equity comp folks like Samuel said, what they actually want, whether it be tax planning, whether it be charitable, whether it be all these areas and then also too the way the relationship is going, as far as the level of connectedness, whether it be communication, whether it be how you're connecting with my life, and do you know me, these type of things. There's many areas to measure. So it's what people expect that they're getting and what they want and what is actually being delivered. That I think that's the biggest key there.
Samuel, thoughts?
Yeah, I think Dr. Charby hit on the nail in that, what clients want and what advisors are providing are very different, right? Like Bank of America came out with a study that said that 75% of young investors say that it's impossible to achieve above average returns solely with traditional stocks and bonds. That could be true, or it could not be true, right? But I would say that the majority of advisors, at least in the RIA channel, that's exactly what they're providing: asset allocation to stocks and bonds. Not many advisors are talking about crypto. Not many advisors are talking about alternatives, startups, real estate. And you don't necessarily have to allocate to those things, but I do think that including some layer of education is extremely important if you want to sort of position yourself to service the next generation of investors. So I think, you know, what Dr. Cherry mentioned is spot on. Even if we look at something like estate planning, right, where 81%, at the least 81, because this study was done, I believe, in 2021 or 2022, actually, but 81% of high net worth investors want to talk to their advisor about estate planning. In all actuality, I think it's like a single digit number of advisors that are actually helping clients implement estate plans, which should be the core of your financial plan, right? For me, I wouldn't be able to sleep comfortably at night knowing that if my client is in a worst case scenario and something happens, that their family is not being taken care of, right? Like, that's our responsibility as fiduciary advisors. And so I think Dr. Cherry hit it on the nail that what clients want, advisors aren't necessarily providing. And that's certainly something that's going to need to change if you want to, you know, if you want to grow and position yourself in a way to do so moving forward.
I want to like double click, and I got to pull a stat that you just sparked in my brain that I want to get right and share on this. Okay. So this notion of, do you know me? And as we talk about the future of the industry, as we look at the data that's coming out from a lot of different sources, Gen X right here and the younger generations are saying we want to pay for advice. We're actually more inclined to pay for advice than baby boomers, but we want one-stop shop. We don't want to have to go all over the place for estate planning and tax planning and insurance planning and healthcare planning. Because why? For the sandwich generation. And why on the younger generation do they only want to go one place? Because they are used to having instant access to resources at their fingertips. Why are you making this hard for me? Why is it hard for me to open an account? Why do I have to run all over the place? And it's incumbent upon me to build these relationships with all your centers of influence. And so this, you know, what I think is so exciting about the future state of advice in our industry is that it's a mindset shift that has to happen for advisors. There is tremendous respect for G1 and how this industry has been built, and at the foundation of its core, that it is all about service, right? Service above self, like helping people, doing good. That's amazing. But G1, and it's because it's hard scrabble, right? We had to take every client dollar that we could have to build our firms. We were chief cook and bottle washer. We're not comfortable with hiring talent and really aligning them around roles and responsibilities. And so as a result, my value proposition is I'm going to manage, you know, we're going to manage your portfolio in traditional stocks and bonds, and we'll have our annual meetings and we'll do some, you know, some degree of financial planning. And what is so interesting is that if we flip it and we say table stakes are, I have a robust financial plan. Table stakes are my investment portfolios diversified. I completely agree with you. Diversified across multiple asset classes is reflective of my goals. Table stakes. Table stakes are you're thinking proactively, tax planning, estate planning, you know, all of this, my life planning. But then where I think that there is this huge opportunity is, how do we truly personalize the experience? How do we help a client feel like, you know me?
Yeah, you said a lot, but it all is spot on. And I don't think things are table stakes. To be honest, you know, having a comprehensive plan to where you know, these domains are hit, you know, tax planning, retirement planning, your lifestyle now, understanding your values, and that's who you are, you know, your risk analysis, your business valuation, like, as Samuel said, your equities comp, your employee benefits as a business owner. Listen, that's not table stakes, unfortunately, because the, one of those areas, one or two of the areas are not being met. The imagination is not there in order to touch all these areas. It takes courage to touch all those areas on a technical aspect and provide some expertise in that. And then also couple that with the other areas, which is, connectedness, meaning, do you know me is just not like, uh, know your client, KYC, old school. It is a understanding of the person that you are serving, in a way for them to investigate oneself. And then also what that experience is when I arrive to your place of business, to your firm. How is that experience going to be? There's a reason why, and I'm going to McDonald's, right? There's a reason why McDonald's and all these other places are reinventing their places of business, as far as when you walk in, and how that experience is because they want you to feel something while they're there. So it's three pronged. It's technical, it's personable, and it's also the experience. And that's not table stakes, unfortunately.
I actually agree with Dr. Cherry here. I actually think investment management is table stakes, right? Like, clients, at least those that I'm working with, they can open up a Betterment account, and if they're disciplined with how much they save, they'll be just fine in terms of having enough assets to retire. It's the financial planning that determines, well, how much assets do you actually need to retire, right? What does retirement even look like for you? In my firm, we don't use the word retirement. We use work optional or financial freedom, right? And I think that goes to the demographic that we're working with. And so going back to, in my intro, I mentioned we offer financial planning and we offer investment management. Just, last week we onboarded a new client, and normally we send our financial planning agreements, investment management agreements, and in one DocuSign, regardless of if they only want to do financial planning, just because, we don't want to have to go back to then send them a new investment management agreement. And the client is an employee at TikTok. The spouse is a business owner who went from last year making 50K to over $500,000. And so I sent them everything. And guess what they responded with? Hey, we're actually only interested in financial planning. Like, we can sign the investment management agreement at a later time, like if and when we choose to do that. But this is something that clients think that they could do on their own. And I don't necessarily disagree. I do think that there's a ton more value in the financial planning and just giving clients that clarity of, can I retire on time? Like, what are the things I need to be doing with my business to make sure it grows so that we can take care of our family? Estate planning for me, I used to think estate planning was super boring, right? I'm coming from a world where we're talking about IPOs and your company going public and you essentially becoming an overnight millionaire, to talk about estate planning. But it's now become my favorite topic because I learned so much about what actually brings my clients fulfillment. Like, I tell them all the time, like, if you're doing financial planning and you don't feel like a therapist, you're doing it wrong. And I wholeheartedly believe in that. I think that is truly what clients are reaching out to us for, is to just have clarity around what's possible. One of my favorite questions to ask is, imagine you have all the money in the world. Tell me what your ideal life looks like, right? And it may mean that maybe you don't need to beat the S&P to accomplish that. Like, what if we decide that you only need a 5% return to accomplish that end goal of what fulfillment looks like? Investing is truly in that scenario table stakes. So I definitely have to agree with Dr. Cherry there, that I think that the value that we will have with our clients is everything. Not that investment management isn't important, but I think everything else is a lot more important. Even recently, there was an article that came out that talked about how the future financial planner will be more like a life coach. And I think that says a lot about the shift that we're going to see over the next 10, 20, 30 years in our industry.
It's like you were reading my mind. That was going to be my next question, which is, do you think the future financial advisor is a financial life coach?
I don't
Yeah.
like the term life coach. And I'm still trying to figure out why. But I do think that our role will
How about a
fall.
financial life advisor? Let's
Yeah,
stay with advisor
I think I
and insert the
like
word
that.
life.
Yeah, I think I like that better. Because we are going to be better positioned to help people. People don't have the time to even think about what brings them fulfillment, right? So, but if we can learn how to ask the right questions to help them come to help them create their own story, and then we can use the numbers and all those things to figure out how to get from point A to point B. But our job is to ask the right questions so that they can have the clarity that they need to know, well, what does bring me fulfillment at the end of the day? A lot of these people are working, 60-hour weeks, trying to provide for their families. Like, explain to me, what time do they actually have to think about, well, if money wasn't an issue, like, how would I spend my time? Like, in my opinion, that's a powerful question.
Most definitely. Oh, see that? Yeah. So we're getting into the crux of what financial planning is. With I put the emphasis on ing because ing is life. It's life's course, and the technical definition of financial planning is helping people accomplish their life and financial goals through financial advice. That's the technical. So for folks that say that financial planning doesn't have any definition, oh yeah it does. Okay, so that's number one. All right, and then you are helping people with their life's course. I like to say, if you when you align life and money, you can give your money assignments. So, and
Say
when
that one
money
more time. That's a good one. Say that one more time.
when you align your life and money, a life and money alignment, giving money assignments, and to put it point blank, right? And this is what we help do, as Samuel was touching on, is asking those questions to help people explore and investigate, uncover, unlock, what their life aspirations are. And without life aspirations, I just share with people all the time, particularly for Gen X, used to you spread that white glue everywhere on the construction paper during art class, and you spread too much, the paper would slide all over the place, right? And that it doesn't stick. But if you got that Gorilla Glue now, right, all you need is a dot, and you got it. You got that adhesiveness. And what does that have to do with life and money? When you got life and money alignment, you give your money assignments. And as Samuel was talking about, if you can, no, when, not if, when you unpack the values that you have, the attitudes that you have, the experience that you have, and want to build your life design, your aspirational life, then the money can then go here, go here. It can tell you when to unlock that equity compensation. It can tell you when you want to either sell that business. It can tell you how to fund which accounts that you need. Do I need a blend of taxable accounts, flexible accounts, or taxable accounts and employer accounts at your place of business? It informs everything. So that is the magic of a human being and bringing together the technical aspects of the what I call dollars and cents, dollars and cents with an S. And once those are fused together, you got magic.
What do you think is going to be the watershed moment on this? Like, so we're at the beginning of this generational wealth transfer. If you look at some of that data, it says, first stop is women. By 2030, women are going to control 67% of wealth in this country. And then obviously it's going to continue transitioning into the next generation. So as you think about the next 2 to 3 years, and maybe Samuel, let's start with you, as you're building your firm, how do you intend to capitalize on that?
What I think, this is an excellent question, by the way, and I actually did not know that women would be controlling that much wealth in the generational wealth transfer. But what I think most traditional media publications and platforms miss is that millennials aren't up next when we're talking about the generational wealth transfer, and I'm sure Dr. Cherry is gonna expand on this a bit further, but it's actually Generation X. They are next up to receiving that generational wealth transfer. And so when folks talk about like, what are you doing to work with more millennials and this big generational wealth transfer that's happening and so on and so forth, like I'm sure there will be a decent portion of millennials that will be participating in that transfer. But the majority of folks that will be participating in that transfer is Generation X. At least where we stand is that our oldest client is maybe about 45. So I'm not quite sure that we will be dealing with that at least in a significant manner over the next 2-3 years. But, I'm 32 years old, and I think I don't know if this answer suffices, but literally just me being myself will attract younger folks that are like me. I am in no way concerned about advisors who are managing billions of dollars and those sorts of things, because I know that I will relate to my demographic much easier than they can relate to them. And so literally just by being authentically myself and connecting with the people that I have things in common with is literally our strategy to position ourselves for when that transfer takes place.
I love it. Dr.
Yeah.
Cherry, thoughts?
Yes, I'm going to just extend the thought, and shout out to the Gen Xers right there, and Samuel's oldest client. I just turned 45 this weekend. So I'm like, who you call old, brother? But but no, that we are in the thick of it, and the Gen X. And to your question, Shannon, is like, when is this gonna, take hold? Is if advisors through advice helping people with their life and money concurrently are not doing this now and are not planning to incorporate it in their practices to serve folks, then they don't have practices. So when it's going to be a watershed moment is when they start losing business, right? And they start losing clients, because it's cross-generational. And right now, the linchpin, it is Gen X, and we got to keep serving everyone wherever their life is currently. We got to meet people where they are, wherever they are generational. But if we're going to do the ideal generation, it would be those. Right now, you have folks that are anywhere between 43 and 57, as far as Gen X is concerned. And not only the wealth transfer coming through, but the sandwich generation, the high income, all of the aspects that they have to deal with. Then when you say cross generational, they have parents and they have young adult children all the way up to the age of 30, going on right now. So that's another linchpin moment for as which is, if you're not talking cross generationally, okay, you're gonna lose again. So you have to be able to incorporate the multi-generational approach of understanding. And if you're not that singular person, go get the skills or hire that around you, so you can then have that cross-generational conversation.
I mean, it's so powerful. I want to switch gears to marketing and branding, because I feel like, Samuel, when you said this earlier about, asking the right questions and creating your own story, and if you had all the money in the world, what would your life look like? And that people aren't even able to imagine what that narrative is. And I did a course this past weekend, which was so fun, by the way, a 3-day course with Tony Robbins. He did a free course to start the new year. I'd never done one of his. I've always been intrigued by, I mean, he's a master. He's written his 3rd book on money. He's a master coach and communicator. And so he did this free course, and I got a lot of good takeaways, but there was one thing he said that is like just reverberating in my brain, which is, most people major in minor things.
Yeah.
Most people major in minor things. So I want to switch gears, because as you were talking, Samuel, I literally, and this is like occupational hazard, I can't turn my brain off. I see things in like marketing, like, oh, a marketing whiteboard, here's a journey we're going to create. But how have you thought about today, the branding and marketing, you have a very niche focused practice that allows for you to, leverage into that messaging as a result, and the messaging that you're going to continue to amplify in the future. So talk to me about branding and marketing and how you see that factoring in to advisor future success.
Man, that is such a great question. And I'm going to try my best to not, talk in circles, because I have so much thoughts around marketing and branding, particularly around my experience, right? And so as I mentioned, I didn't spend a ton of time, working in the wealth management industry before I launched my firm. Quite frankly, as a Black man being a firm owner, I knew that I needed to specialize in something. I knew that I couldn't be a generalist because, consumers can find generalist advisors anywhere. And I knew I needed something to set me apart. And so when I first launched my firm, I was really just focused on working with millennials, like high earners, not rich yet. And then I found that, okay, well, someone that's 27 and someone that's 40 are in two different phases of life. And the journey from 27 to 40, you're probably going through lots of different things. And so in the first year or two, I quite frankly, I struggled to grow my firm because I couldn't really figure out a message that resonated with high earners not rich yet, because that age gap is so wide, and the things that they're experiencing is so different that nothing really landed home, right? It wasn't until my wife got into tech, became a software engineer, and I was kind of looking at it like, well, there's lots of young people working in tech. All of my friends have questions about 401ks. I know for a fact they have no idea how to even view their stock options, how to take advantage of their stock options, whether to assess whether it's worthless or worth exercising. And that was the aha moment that I had, right? Okay, instead of working with just millennials, let me focus on working with millennials in tech. That in itself sort of gave me a very unique insight into what their pain points really were, right? And so now I better understand the things that these very specific people are having challenges with. And I will say that as a business owner, I am, to this day, I don't like rejection. If someone tells me no or anything like that, I still, I have to try to not take it personal. And so cold calling and cold DMing and those sorts of things is just not my style. I like to feel sought after. I like to be the Warren Buffett of wealth management. But once I decided on a specific group of people that I wanted to serve and understood their pain points, I decided to put my brain on the internet, right? And so talking to people, and usually my content is centered around conversations I'm having with clients, because if you're in this position, you have this question, I can assure you that there's at least minimum 5 other people out there that have the very same question. And so I decided to leverage positioning myself as an expert in a few areas: equity compensation, tax planning, and putting out content that relates to that. If you go on my website, you won't see anything about retirement planning because most of my clients are relatively young. You won't see anything about IRAs or Roth IRAs because you can find that information literally everywhere on Google. Every single piece of content that I put out is related to equity compensation. That way, when this tech employee or this founder finds this blog post, it feels like it's so personal to them, that it's written specifically for them. They do their due diligence. They, go on my website, they see the publications I've been featured in or the awards that I've gotten and so forth. By the time they schedule that first meeting with me, they already know that I'm competent enough and they want to work with me. At that point, it's pretty much a personality fit. And I think I'm a pretty personable guy. And so I'm pretty confident going into many of those intro meetings. And I don't necessarily, track, client acquisition and versus prospect meetings and those sorts of things. But I'm pretty confident going into this meeting that I have at least a 70% chance to sign this person on as a client, particularly because there are not many people out there that are like me that will focus specifically on this demographic. In my early years, and even now, I've turned down doctors to say like, hey, I know you make a bunch of money, but I don't feel confident in my ability to serve you. Like I'm sure that there's another advisor out there that is more competent in the things that you are experiencing, and you deserve someone who is an expert in the pain points that you are experiencing. And so I think just driving that message, being consistent with that message has allowed me to grow. Um, I was actually surprised at the number of advisor referrals that I would get, right? Advisors would refer clients to me either because they didn't feel confident in working with someone that had crypto or someone that had equity compensation, or they are focused on that demographic, but they don't have the bandwidth, right? And so even positioning yourself as an expert in a particular space, advisors and people in the industry recognize that. And you know, that's how we've grown so far, and really taking advantage of social media to be able to put my brain on the internet. And if it resonates with you, you'll reach out to me. And if it doesn't, you're probably not a good fit. But I think the more you focus on specific pain points that you can solve for a very specific group of people, that in itself is a growth hack. And you know, you could call it the lazy approach, you can call it the efficient approach, but that just means that I don't need to even know everything that's going on out there, right? Like the Secure Act passed, you know, maybe a year or so ago. The only thing that I know that's in the Secure Act is that you can roll over 529s to Roth IRAs or vice versa, right? Like beyond that, like there's not much that I need to pay attention to because my clients aren't experiencing those things, right? So I now can only focus on the few things that really matter to our clients, that really move the needle forward. And just positioning myself as an expert in their pain points has been a significant growth hack for our firm.
Dr. Cherry.
Yeah, yes. Look,
I mean, it's so good. That was so good. I'm like,
yeah, oh yeah, it was bad. That's true. I would take a few notes up in there, right? And I'm an advisor coach, you know, so I'm like, you know, but you know, I practice what I preach and teach, you know. So I don't like speaking at people. I like speaking with folks, you know, on their journey. But you know, but as a teacher, you know, both as you know, a coach of advisors and also a coach of clients, so to speak, and a whole bunch of stuff. You do have to put the information in there. So I like to do, and so people can you know witness. And one of the things is communicating with my audience, my clients that I will serve and do serve through the making them feel like I understand them, like Samuel was touching on. All right, for Generation X, the first thing they see when they go to my website is Generation X. They say, yeah, it's Generation X and what matters to them. You know, maximizing their lifestyle not now and optimizing their retirement future. And is in big caps, you know. So who am I speaking with? In the heroes section, as they say in marketing, Gen X. Hey, we're here for you. Right. And what matters to you most, both of these aspects. So you tell a Gen Xer right now, folks that got high income right now, some assets working for them, right? That and you tell them, hey, you know, we want you to just put everything away for retirement. And they were like, man, I don't feel you right now. We trying to live. We trying to live. We not, you know, because the thing I share with folks all the time is lifestyle vitality. You know, you only get one shot in your 40s. And 40s is it. I call it the Benjamin Button moment. You know, remember that movie? You know, things was going haywire in the first half of that movie. Things are going haywire in the second half of that movie. But they're having that dance in that barn, right? And they're like, it's not going to get any better than this. And in your 40s, it's not. You got everything rolling with you. You should understand yourself a little better. You got your money right. You know this. You know all this. You only get one shot. So what are we going to do? We're going to sacrifice this whole decade, you know, to try to live well in our 70s and 80s. Sure, you want that funded, and that's why the and. So, what does that all have to do? It's story. It's gathering somebody else's story, having a story on your site, on your information that you give to folks and offer to folks, so they can say, you know, I can get with that, you know, because that's I'm going through that now, and I believe that these are as Samuel was talking about pain points. These are my challenge points, and these are my champion points. You know, how do we process the challenge points, and how do we elevate the champion points? so we can get to that achievement moment, to that financial freedom, however that person defines it. And if that person can uh, see your marketing is a information share, a story share, and they can connect with it, so they can better understand themselves and where they want to go. Then, like Samuel said, hey, it's already done at that point. They're like, yes, I want to. You see the Michael Jackson right up here. I want to rock with you. I want to rock with it. I want to rock with you. And so they're already there. So it's very key that people find themselves in the message that you are offering.
I mean, this is just like solid gold. I want to share something because we are also like vibing on the same thing. And I will tell you, I'm 52 years old. It gets better in your 50s. It keeps on rolling out of you, out of the 40s into the 50s. We got all the decades here covered.
Yep.
30s, 40s, 50s. And I'm living well past 100, so I feel like I've got like this incredibly rich chapter that is ahead of me. But we've been really working on this as well at RFG, and we do a lot of this work for our advisors. But as we entered into what we're calling RFG 3.0, after we brought on a growth capital partner and closed in 2015 and started to narrow our field of lens of what is the ideal advisor that really thrives at RFG? What does that organic growth look like? How can we help them, amplify their advisor client experience? How do we help them build enterprise value for their family on their personal balance sheet? Like, where is our team most impactful and energized? And this is actually, I mean, it's like all roads lead to Tiburon, I guess. Chip will be so happy to hear that. But April, Rudin and I met for the first time at Tiburon, and we were debriefing after the conference. And I was sharing with her that in 2023, my tagline was, RFG is the most industry awarded firm no advisor's ever heard of. Not something that you're going to like brag about. Like, it was yeah, we got to get better at telling our story. And she said to me, your brand, I mean, and I've got this written all over our office now, getting everyone kind of anchored on it. Your brand should be like a billboard I once saw when I was driving up in the Eastern Seaboard. And this billboard was just screaming at me. And it read, eat tacos on a boat. Eat tacos on a boat. She's like, when you read that billboard, you know exactly why you would call that number, because you want to go on a boat and you want to eat tacos. And she's like, that's what your brand should be able to convey. You should have such clarity around who is your target market. How are you going to add value to them? How can you be of service to them? How are you a force multiplier for them? Everything that you do should just be like in lockstep with that. Eat tacos on a boat. So I love that you're both, having this, like, you've done the hard work that I think most advisors haven't done. I mean, Samuel, there was so much self-awareness in your statement of, I want to feel sought after. I don't like the word no. So why am I going to spend my week setting myself up for failure, however that is defined? Instead, I'm going to get really focused on my niche, really focused on my marketing, really focused on the value that I'm bringing to not only my clients, but my future clients, instead of setting myself up like I'm just going to be here for everyone and I hope they come and all day long I'm going to hear the word no.
Yeah, you hit it spot on. I think, in my case, it's all about strengths and weaknesses, right? I understood that, and I kind of got this from man, I forget the name of the book. I think it's called David and Goliath. And I understood that my weakness was that I'm not someone that wants to reach out and hear no. I'm not someone that wants to have to show you my value, right? And so I'm going to put my value on the internet and have you reach out to me. That was an example of me turning my weakness into a strength. And so, it may have stemmed from my insecurities, but over time, it certainly made me confident in the value that I could provide for, that specific demographic. And, hopefully someone who hears this, who can resonate with my story, find some confidence in their own story to figure out how they can turn, their weakness into a strength to grow their firm.
Yeah, I'll extend a little bit off of that, which is, when you help people find you know, their aspiration, and you find, you know, where they want to go, then, you know, that becomes a place of home for them. And so this is where the connection starts, and goes through the whole relationship. Is the word connection is key. All right, because you're connected internally or externally at the beginning, then you're connecting internally throughout the relationship, as far as the client advisor relationship, and it has to be sustainable. And if they're not spoken, you know, with, you know, where you're helping them with their journey, both in the technical aspect and the emotional aspect, then again, they're not rocking with you. And it is very critical to, like I mentioned, that there's financial, like, wellness and well-being is a journey. It's an arc. You know, if you don't open up the heart, you don't open up the mind. And people want financial compassion first, and then financial education, and then that's the information in the recommendation, because people like to be informed. You know, after you get through with the connection, is very key that you deliver that technical aspect to them and say, you know, uh, I get this all the time from folks. Man, thank you. I didn't know that. You know, thank you for sharing that. Right. So not only have you connected with them on their human side, you've also informed them, because that's what they want. And then there is measurable and meaningful action that has been delivered upon and encouraged. And if then you have advocates all day, you know, they going down the street, and they're like, you know, I think there was I think a post about this here recently. You know, when Harry met Sally, and she was like, yeah, you know, I want what she's having. All right. And then you go out and somebody says, oh, you know, my financial advisor did this for me. And they're like, my financial advisor don't do that for me. You know, be like, I want what they have right there. So if you are, you know, connected with them internally on your website, you're socially, then you're connected with them internally. You have that sustainability. You're delivering on the human front. You're delivering on the technical front. Then that's how you really grow businesses. Folks to say, you know what, I, I I want what they're having right there. And that's how the whole show is about growth.
Yeah.
That's how you had that growth, because it's very definable, and it's very understandable.
Oh my gosh, I love it. Okay, so last question. Yes, no, and why? Are we in a bull market for advice?
Samuel?
Yeah, 100%. I can't see how anyone would answer anything other but yes, anything else but yes, I should say. Again, I think going back to our original, you know, statement, you know, clients want advice that extends well beyond investments, right? They want advice around how can I save for retirement while saving for buying a house, right? How can I balance, you know, saving to pay for my kids' college tuition and paying off my own student loans, right? Like, this is the type of advice that at least young people, you know, 100% need advice on. So I certainly think that we are in a bull market for advice. I don't see that changing at all. I actually only see that the type of advice that we are providing, I only see that expanding further and further, especially when you look at the type of, like, fintechs that are coming out, right? Like with folks providing, like, healthcare planning for retirees as they get older, and helping them figure out, like, which type of Medicaid or healthcare plan makes the most sense for them. Or as folks are looking for mortgages, and for first time home buyers trying to figure out, well, what type of program makes sense? Should I go FHA? Should I go conventional? Like, what does APY even mean? Like, I don't know that advisors were having those conversations 5-10 years ago. And I certainly see that being a shift. And so definitely in a bull market for advice, and the scope of advice is only going to expand as the years go on.
Dr. Cherry?
Yes, yes, and yes, right? So yes to the bull market of financial advice. It's the type of advice that's in the bull market, you know, as Samuel was talking about the scope. So yes to financial advice. We definitely have a high demand for it, but people want advice that they can feel. And that means meaningful and measurable. my grandfather, I gave my grandfather a card one time, and I put these loving words in there. Grandfather, this and that, this and that. You know, you're my best grandfather in the world, this, that, and the other. He said, grandson, it's a beautiful card. And he looked at it. He was like, yeah, but where's the rest of the card? Next time you give me a card, I want something in there that I could feel. All right. So he was not only the words, but he wanted some cash in there too. That goes to the aspect of, you know, delivering that human element, developing the experience of your relationship, and also on the technical side of the information, for they can be informed and they can move their lives forward in those three aspects. If they have advice that they can feel, then yes, high demand for advice all day long, and they'll pay for it, and they want it, and they covet it.
This has been amazing. Thank you both so much. Like I'm like, okay, what's chapter 2? Like I can already feel our second one. We're gonna need another panel. We're gonna need another podcast. Thank you so much. You're both just incredible and have such an important voice in the industry and represent what the future is going to look like. So thank you so much for joining me today. It was a ton of fun.
Thank you, Shannon.
Thank you for having me.